Ready?
Ready, Teddy.
Welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing mortgage investment firm, and Robert Schiff of RPM Mortgage. Our phone number is 888-912-1190. Now you're going to use that number to answer the trivia questions for 3 vacations given away.
What was that number again?
888-912-1190. Write that one down because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away how many?
3
per commercial break. That means
9
9 vacations during this show. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The weather's getting really nice and hot there, so check them out at lighthouse4fun.com, and the vacations are free. The only request is a $75 cleaning fee to cover housekeeping expenses. Such a deal. You can also reach them at 916-777-5511. Today's trivia theme is Elvis Presley's song, In the Ghetto. Remember that song?
All the questions
Yes,
are based
I
on
do.
that
Yes,
song?
all
Yes, I
the
do.
questions are based on that song. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television. Woo!
Wow.
Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and 6 p.m. on Sundays. And this segment of the Best of Investing is brought to you by Crystal Bull, not Crystal Ball, but Crystal Bull, BULL.com. And if you've ever wondered why the stock market has big up or down days when new economic data are released, check them out at crystalbull.com. They show these relationships graphically. Now, Robert, we're going to get right in with you because you have some very interesting news to share with us, with our listeners.
Well, the real estate market is continuing to be on flame in the Bay
Good.
Area. Everybody that's trying to buy a house has learned that just making an offer is usually not enough. There's 5 to 10 to 15 other people making
Still?
offers.
That hasn't slowed
Still,
down? Wow.
Some people say it's slowed down in some of the quote lower price segment of the market, which in the Bay Area might mean $500,000.
Sure.
But if and I haven't even experienced that, but certainly in the 700 to 1.7 and up, there's still almost always multiple offers. And realtors really listing agents really wants to make sure that when they accept an offer, they're not going to have problems with people getting the financing.
Yeah.
And so a word to anybody who's looking to buy a house. I think that you can do best to get yourself ready and be in a position to be really strong is to have whoever you are using to get a loan. Hopefully it's a mortgage broker so that you have several opportunities and there's a broader range of places that they can go rather than just one bank. But wherever you're going to get the mortgage, make sure that you talk to that person ahead of time. Make sure that you get a complete application into them. If it were with me, I would almost insist that we pre-underwrite your file, get everything in, get it to the underwriters, find out exactly where we're going to go so that you can make an offer with very, very limited time frames. And I'd be able to contact the listing agent and say, here it is, we already have approval, we can do this as quickly as you want. And I can show them the
That's a good
approval.
strategy.
How's the loan volume, Robert, in your office changed now that we're in May?
As compared to
Last year, this time, or at least this year, how's it? Because it started out pretty slow this year.
It started out slow and it's definitely picking up compared to last year. You have to look at the difference between refinances and purchases. The refinance market was hotter last year than it is now. The rates really haven't gone up, but they've gone up a little bit since their low point and pretty stabilized. But the purchase market is hotter. And because values have gone up and the purchase market is hot, there's also a large segment of people who have owned their houses and bought it at a height and it went down and they were possibly underwater. And now that they're finally able to come back in, and if they had a loan that wasn't to their liking, they'd be able to volume is generally lower than it was last year.
Yeah, well, interesting enough, they just posted this week the May unit sales for Bay Area, and they jumped 20% from the month of April. No, I'm sorry, April's jumped from March. We're in May. 20%. And that's a huge jump. So unit sales in the Bay Area are even with last year. And if, for those listeners who've heard us in prior weeks, we were talking about how unit sales were actually down year over year for most of this year so far, but they jumped. And what's interesting is it kind of corresponds to what we talked about on the show a couple of months ago, that when I told you that I was noticing on the MLS, all of a sudden after the Super Bowl, there were a lot more listings in Marin and elsewhere in the Bay Area.
That's historical.
typical,
I was
yeah.
a realtor for years before I was a mortgage broker.
Yeah, the
We
husband
always
say,
said,
wives, I'm not going to look at houses. till
or
after-
suddenly it's the end of January and he realizes, oh my God, it's no longer Thanksgiving, Christmas, or oh my God, I'm going to have to get my taxes ready. I better really get moving, and I'm getting some pressure. So that generally was the start.
You're absolutely right. And apparently the average increase in unit sales in the Bay Area from March to April is 5%. That's a pretty good jump, but 20% jump, and that's significant. That was unexpected, and we're about even on unit sales year over year from last year. So you're right. The bottom line is the market's hot. Interest rates are still very affordable, and there's a lot of pent-up demand out there. People are wanting and needing to move, and so as you say, doing your homework first. It's funny that you say that because I am preaching that in my business at Pacific Private Money, where we're getting in hard money loan requests on a fairly regular basis, and I'm telling these guys, look, it's not enough just to call me and get a verbal. You need to put your package together. You need to get everything. You need to do a little bit of homework. You need to get your information together. Even hard money lending is not what it used to be like, prior to the crash.
No, you're
It's
also
not easy money.
you're also under a lot of requirements. And
Yeah, hard money is regulated now almost as much as conventional lending
That's
is
true.
nowadays.
But people would call me, a blind call, and say, "What's your best interest rate?" And I would say, 1%.
Yeah.
And they'd say, "What do you mean?" And I'd say, "What do you mean? I need to know who you are." When we go take your file to the underwriter, they don't care if you have a receding hairline, excuse me, or not. They just care what the paperwork says, and that's all that they're going to look at. And that's who you are. To
Well,
the
I
bank.
would think that if interest rates start to blip up even more, aren't there going to be a lot more people who are thinking, oh, rates are going up, I better quickly, I got to now seriously go get that house?
There is that sense of urgency that affects, that also affects, what's happening out in the marketplace and the effect on inventory.
Now, there are a lot of people that say, no, the economy's not strong enough for it to bear a higher interest rates, and I've been saying that, but I'm seeing some articles and listening to some people that said, don't fool yourself, this is not forever, and
Sure.
quantitative easing is easing,
Yeah.
and the government really wants to get out of the amount of money they're throwing into the market, so it's real possible that interest rates will rise. I really don't think the economy can afford too much of an increase in interest
No,
rates. And oddly enough, in the jumbo loans, $1 million and more, a significant percentage of those are no longer 30-year fixed, but they're loans that are fixed for 5 years or 7 years at a lower interest rate.
Very good. Okay, we're going to cut to our first commercial break. Before we do, last week we had a special trivia contest where the winner was going to win a 2-night stay at the beautiful Fairmont Sonoma Mission Inn.
Fabulous.
Yeah, the renowned for natural mineral waters, unparalleled charm, and gracious service, the Fairmont Sonoma Mission Inn and Spa is located 40 miles north of the Golden Gate Bridge in Sonoma Valley. Of course, everybody knows that place. It's awesome. In fact, they just renovated too. In the heart of Northern California's wine country. They recently renovated the resort, consistently providing the country's finest European spa, golf, and culinary experiences. For reservations, call 800-441-1414 or 707-938-9000, or go and visit the inn's website at www.fairmont.com/Sonoma. Now, here was the trivia question. By the time you're 35, you're at the top of your game for this. What was it? What do you get at the top of your game by the time you're 35?
Earning income or
Spelling. spelling. Yeah, isn't that amazing? And our winner was Grace from Concord.
Being spelled from what?
Expelled. Yeah, no, spelling. I thought that was kind of interesting. Okay,
Wow.
so now we're going to get to our first commercial break, our regular trivia question. Again, the theme is Elvis Presley song, In the Ghetto. In which city is the song In the Ghetto? In which city does it take place? The song, all right? The first three callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In which city is the song In the Ghetto? In which city does it take place? Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. The Best of Investing will be right back.
You don't have a question about Colonel Tom Parker as it relates to that song, do you? Because I have a comment I can make about that I heard on the radio.
Colonel Tom Parker.
Colonel Tom Parker was Elvis Presley's manager.
Oh,
I didn't know.
I did not know
You know,
that.
As opposed to Colonel Sanders. You know.
Yeah, or Colonel Clink.
Cold and dark September morning, little Joe was born in the ghetto.
Sing it for us, Robert. Sing it.
I'm taking a guess.
I don't remember.
Detroit?
Probably
This
is
is gotta
Detroit.
be,
I was gonna say Chicago.
hold on
Probably
here.
is Detroit.
Okay, what is this? This is
Chicago.
BOI. I can't remember what are we here? And
Boy.
This is the 17th. This is 17th. Sigmund Wolf. Sigmund
Kramer, I noticed you only had an hour left in your meter.
I know that's not true. I put 2 hours in there. Ha ha. The new credit card, or else I'd get sure. $35 is expensive. If you,
Oh my gosh, yes.
I mean, once a year is fine, but
You guys ready?
We can talk, I've got
Get into
the
it.
stats with respect to the conversation we're having. Get some,
Perfect.
some stuff.
Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Robert Sheff. When we cut to the first commercial break, we asked this trivia question. Again, the theme is Elvis Presley's song In the Ghetto. In which city does that song take place? Robert.
I was going to say Chicago, but
Detroit?
Actually, it is Chicago. On the cold and
No,
gray
well, I did-
Chicago
I did-
born, and a little baby child is born in the ghetto.
So I heard that song was the only song that Elvis's manager, Colonel Tom Parker, was not in favor of him recording.
he was not in favor. It was,
It's
a,
definitely
it was a big
different.
resurgence. It was definitely different. I was shocked.
Yeah.
Well, I'm old enough to remember when it came out.
Yeah, me too.
I was shocked. It was
1969.
so different from. It was not bubblegum.
No, not Hound Dog and any of that stuff. Jailhouse Rock. So, Mark, you've got an interesting article there. You want to share
Well,
with
yeah.
us?
Well, we were talking last segment about the real estate market, mortgage rates, and I mentioned that unit sales in the Bay Area jumped 20% from March to April, but that still only amounts to about 7,500 unit sales. Okay, so how does that compare? The average unit sales for May in the Bay Area is it's just under 9,000 units. So we had 7,500 units sell this year. The average is 9,000. The high
That's for a month.
for the month in the Bay Area, the high was in 2004. It was 14,000 units sold. So Bay Area sales haven't been above average for any particular month in more than 8 years.
And
So
it would be interesting to find out of those 14,000 how many went into foreclosure 2 or 3 years
Yeah.
ago.
It's like, what's the new norm now?
yeah, so I don't know what it's going to take for the market to bounce back to the average of unit sales
And what did you say? What was the average? So it wasn't 14,000.
Well, the sentence I just read earlier from the report that Bay Area home sales haven't been above average for any month of the year for over 8 years. So for the past 8 years, I mean, obviously we know what we went through, but you would think now with the market how heated up it's gotten, you would think that would result in unit sales at least approaching average, if not above average where we were in the market before 2006.
We may be seeing, especially in the Bay Area, a bifurcation where there are people who are Google heirs or people who have the money to buy whatever price property they want. They're part of the thing that are fueling the upper ends of the market, whereas the lower market is stabilized compared to what it was several years ago. I think, Mark, you may be seeing that it's not as easy for an investor to come in and buy a property with a hard money loan for you and sell it within a year or two and make an easy profit. That's probably not as a sure a thing as it was with the proceeds, and profits aren't as great as they were, which may be sort of healthy for the economy in general.
Well, and we all want a healthy real estate economy, but my point is that we're not in a healthy real estate economy, because a healthy real estate economy, we would have more inventory available, we'd be at or above the average in unit sales. We're not even close to that. We're 15% below that right now, and we've got a shortage of inventory, and yet we still have people trapped in their homes that are upside down. So it's really, I mean, it's a quandary, and I don't have a crystal ball better than anyone else's, so I don't really know what the answer to that is. But we've got low interest rates, we've got people fighting over the few listings that are appearing, even though there are more listings, and we've had more unit sales than in prior months. But we're still kind of stuck in this catch-22 real estate market, where it's not the healthy market that we really need, and what the economy needs. And because, as we know, real estate is such an important aspect of the overall economy. And something you said earlier, that it's harder to fix and flip property too. I mean, that is absolutely true. Our fix and flip loan volume at Pacific Private Money, where we do hard money loans to real estate investors, it's way down. I mean, it's a fraction of what it was in 2012.
And that's probably commensurate with the fact that people that came to you and say we're buying a house in Vallejo or Stockton or Sacramento that was probably 30 or 40% of its highest value, and now has probably gone back up towards what its highest value was, or maybe 80% of it. So those houses that were stuck in foreclosure now have appreciated back to pretty much
I wonder
where
what's
they were.
I wonder what's happened with Detroit, because I was just reading an article that they're looking to do even deeper loan modifications, because there's just so many houses that are underwater. I mean, Detroit's not Vallejo,
No,
so I'm guessing that it's
I don't
there's
know.
still a lot more abandoned
I
houses.
know
there.
that they were, and I think it was Detroit was one of the cities that were going to the banks, and then for every house that was foreclosed on, they were going to charge them a monthly fee because the banks weren't maintaining it or didn't have security, and people were crashing into the house and using it for whatever reasons, and the city would have to go. So they were going to charge the banks something like $500,000 a month for each house, which would
Yeah, they
encourage
can't
the
have
banks
the
to.
blight. You can't have a blight on the on the streets, because you've got weeds growing and all that other kind of stuff. Sure.
Well, you made a comment, Robert, earlier also about the bottom end of the market has pretty much recovered, and the stats also bear that. That was also something that stood out in the April report that just came out for the Bay Area. The number of homes that sold for less than $500,000 dropped 25%, and the homes selling for more jumped up 10%. So we've really, and that's why the median price is going up. And we've talked about the median price and how much I hate that, because it's lazy reporting, and it gives the connotation that the average value of a particular home has gone up X percent because the median price jumped up X percent. That's not true. It just means that the type of homes that are selling, far more homes are selling at the higher end right now. We had a 10% growth versus a 25% decrease in the number of homes below 500,000. So the lower end is no longer a bargain, and foreclosure sales, short sales, we're back to normal again.
Well, the lower end, it is still a bargain from what I see, and that's the function of the incredible increase in rents in the Bay Area. So, because rents have gone up so much.
I think that's the
I
key.
have had clients come to me and say, rent's going to raise from X to Y, and I'm looking at their capability of buying a house, and even with a small down payment and the tax benefits of ownership, not to mention the psychological benefits, they would, to their surprise, benefit by now owning. Even though prices have gone up, the rents have gone up incredibly in the Bay Area.
Now, what about the banks though loosening up?
Well, the banks are about as loose as they're going to get with all the new regulations.
Which
is
I
not.
Still, you
So-
know,
so-
it's a trip to the bank or the proctologist.
Yeah, I mean, you would think that the bank would look at it and say, you know, if you can afford X rent, theoretically you should be able to afford.
They
X.
just need paper to verify
Yeah.
everything. So even if they are paying rent, they really, the banks need to have everything verified. And the bottleneck is that when the banks close a loan, they mostly are sold to Fannie or Freddie or to Wall Street. And when they're sold, whoever buys them can go through that. And if there's any single thing that doesn't totally meet the new requirements of Dodd-Frank law, they can go back to the bank and say, by the way, you have to buy that back from us.
Yeah, they don't. They
because
definitely don't want that.
Well, I'm just gonna make a comment on, you were absolutely right to point out, you know, I said that there's not a lot of bargains at the lower end of the market right now, certainly for fixing and flipping, but your point in that it's still a bargain if you look at it in comparison to what rents are. I know how much rents have jumped up, for example, in Marin County where we're broadcasting from, and it's just been incredible, 25% in the last couple of years.
And they
so,
weren't low to begin with.
yeah, that's exactly
That's
right.
true.
And so you're absolutely right. For you know, it's not unusual to pay between $4,000 and $5,000 a month for, you know, a 3-bedroom home, and you know, at that rent, you know, you could afford to pay $1 million for that house and still have a lower monthly payment based on mortgage rates that are still a relative bargain given the historic nature.
And that's one of the things driving the market, but like you say, there isn't the inventory to
Yeah.
commensurate with the demand.
All right, guys, we're going to cut to our second commercial break. Again, the theme is Elvis Presley's song "In the Ghetto." In the song "In the Ghetto," how many of the young man's brothers and sisters are mentioned? First 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190. I can see, Robert, you're singing the whole song in your head.
I'm trying to remember the words, yeah.
That's great.
To answer this question, in the song "In the Ghetto" by Elvis Presley, how many of the young man's brothers and sisters are mentioned? Call 888-912-1190. Make sure to include your name and your email address. Spell out your email one letter at a time, please. Don't touch that dial. The Best of Investing. We'll be right back.
That would be interesting to see what's happening in Detroit where so
Yeah. Buy a house for $1.
That's right. You can on the auction.
Some cases.
that's right.
We're still buying.
I remember years ago, I grew up in the East Coast, and there were people in Baltimore where
Yeah, Baltimore's
like
bad,
they would
yeah.
go into an entire block and they worked with the city. And the city would put up funds for one block of row houses. And they'd go to everybody who was living there and say, do you all want to become owners? We're going to form an association. You have to pay $100 a month.
That's
And
outrageous.
there's a mortgage to the city and includes security on each end of the block, so that that
Good idea.
one block, suddenly there were windows and there were doors, and
Smart.
it just spread out. It was really impressive. It's a nice thing to see.
Very smart. We'll get into email here. How's that?
Yes.
Sounds good. There you go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Robert Schiff of RPM Mortgage. In the trivia question, the second trivia question, we asked about the song "In the Ghetto" by Elvis Presley. How many of the young man's brothers and sisters get mentioned?
You know,
No.
six. I
0.
don't know. 0.
They don't mention anything
Oh,
about brothers and
that's
sisters.
sad.
Not a trick question. They just not a trick question. Okay. Actually, before we get into email time, next week we're actually going to have another trivia contest, and the winner's going to get an overnight stay at the Westin Verasa in Napa. So located on the riverbank in the heart of downtown, the Westin Verasa Napa is within walking distance to more than 15 Napa Valley wine tasting rooms. That's kind of nice. And replenish your spirit and sense of fun this season at the Westin Verasa Napa and experience the bloom of spring, the peak of summer, the autumn harvest, or the cozy ambiance of winter in luxury. With 180 guest rooms that are offered with unique packages, there's nothing holding you back. Visit www.westonnapa.com. They are a member of Starwood Hotels and Resorts. Gotta be nice. Okay, and here's the special trivia question for next week. Over 30% of adults have never done this. What? Okay, now let's get right into our email time. Robert, we have an email which kind of relates back to what you were talking about earlier. Here's the question: is there anything I can do to get my records in order so as to look better to a lender? That's a very good question. Actually.
Somebody emailing that is already on the right track. They're thinking ahead. They know that they want to get a loan, whether it's for refinance or a purchase. The requirements are much more stringent than they used to be, and the best thing to do is to work with someone that's a mortgage broker or a banker so that they can pull a credit report with your authorization. The credit reports used for mortgages are not the same as the credit reports that you can get online. The banks slightly different formats, and that's a great start to work with someone and find out if there's some problems. Sometimes things in the past that you thought were cleared up are still showing as active, and it would be a great start to be able to verify that everything's clean, or if there's some problems to work on that. In addition, the banks are going to want to see a 2-year history of employment, and usually with tax returns. So it's really good to get those into the hands of someone that knows how the banks look at it, so they can interpret it as the banks see, which is sometimes different as how as an individual you're looking at.
Yeah, because I would think if I'm the agent of the seller, it would be great to see that ahead of time before I accept an offer that has some kind of loan.
A lot of times the seller will contact me, or I take the initiative and contact them and let them know how far along we are, because when you're looking to buy a place, there's usually multiple offers, and someone else is totally prepared and ready to go and can verify that to the listing agent. So the best thing to do is to collect your tax returns, to authorize whoever you're working with to pull a credit report, and also if you have funds that are available, the best thing is not to move them around, to keep them wherever they are.
Oh, yeah.
Good point.
I've gotten some business because of that, because they've moved funds around and now they didn't qualify conventionally. The bank decided not to do the loan, and they're coming to the hard money guys saying, hey, I've got a closer.
So Mark, your advice is to keep moving money
yes,
around.
Yeah, go ahead, keep moving that money around, and I'll be waiting for that call. Hey, Robert. So we're into the 5th month under this new QM qualified mortgage regulations. The last or the latest and hopefully the final round of regulations that went into effect in January thanks to Dodd-Frank. So now that we're in May, how has that impacted loans? Is it still impacting it? Is there some hangover still, or are you seeing now applications for purchases are back on the rise again? How's that going?
Well, what's happened is now everyone in the business has to take a client's paperwork and information and make sure that either they will be a qualified mortgage in the new terms, but if not, now there are more sources than there were in the past for being able to get a mortgage if you don't meet the safe harbor qualified mortgage.
Oh, really? Oh, okay. So the market abhors a vacuum. So if all of a sudden too few people qualify, I guess you have to figure out an alternate route.
Yes, and that depends on many factors, what the loans would look like, but it's best to really get all your information to someone that you have faith that they can successfully translate that into whether you're going to be qualified for what amount of loan.
And that someone might just be Robert Schiff of RPM Mortgage. So how would people get a hold of you?
My name is Robert Schiff at RPM Mortgage. Go onto the RPM website, which is wonderful and has a lot of information. You can always get a hold of me on my cell phone, which is 415-515-1941.
Very nice. I know that when I've called you in the past, boy, you're pretty quick to either answer, or if I leave a voicemail, you get right back.
Yes.
Very good about that.
Thank you.
I don't care if it's 3 a.m. on a Sunday morning, you're there, baby. Okay, Mark, we have an email we received that's for you that says, do you provide home purchases for first-time home buyers?
Well, we do, and so I'm broker and president of Pacific Private Money. We're based based in the San Francisco Bay Area here, and we originate privately funded loans. Back in the old days, they called them hard money loans, but we prefer the term private money loan nowadays. And it's not like your father's or your grandfather's private/hard money loan. We do different types of lending criteria. I mean, it's a real industry now, and the industry really sprang up and matured post-crash after 2008. So many banks pulled out of the lending industry when it came to the different types of loans, like investors and people who now were no longer qualified. And all of a sudden, there was this void of financing available. So the private money lending industry really responded to that. Now, 2 years ago, 75% of my loan volume was flippers, guys that are buying, fixing, and flipping. But now in 2014, we're actually doing a lot of consumer lending. In fact, I must do 4 to 5 transactions per month just on bridge loans, which we define as someone who is buying a primary residence and something happens during the qualification process for financing. They may have already, their deposit may have already gone hard, meaning non-refundable, and they're ready to close, and for some reason there's a glitch in their application and they fall out of qualification for bank financing. And so the private money lending industry, and particularly Pacific Private Money, we have a program for being able to close relatively quickly and easily. I mean, it's not inexpensive. A typical bridge loan would be a short-term 1-year loan at like 9.9% with interest-only payments. The points are between 2 and 3 generally, and about $1,000 for additional processing and closing costs.
But if it's that or losing the house
Well, it's
they're
that,
buying,
yeah.
that's
It's a
gift,
decision,
really.
right? If you have more to lose, and a lot of people do. Deposits can be pretty high in the Bay Area. We closed a deal for someone who had a $50,000 non-refundable deposit on a $1.5 million home, and we were able to, within 5 days, put together $1 million purchase money loan for that transaction, and the guy got the house that he wanted. He saved his deposit, and
Well, there's no prepayment penalty.
there's no prepayment penalty. So yes, it's expensive, but it's an option. I mean, we're not out there, pounding the pavement promoting it. It's really, we're promoting it to people like you, Robert, who are in the industry, because you end up with a client who all of a sudden it's like, oh crap, something happened and now we can't close. What do we do? Well, here's an option for you. You go private money, and here's what it's going to cost you.
And I would think that would make you look good, Robert, because
Oh,
you're
yes,
trying to.
because the reasons that it can start unraveling at the end are multifaceted.
So I can imagine someone comes to you, Robert Schiff, for a regular loan, and you're going through all their underwriting, and then for whatever reason there's some glitch that comes up, like the situation where a guy had his credit report.
Uncle Joe's wife said you're giving them that amount of money. I don't think so.
Yeah, or just
Or
you know,
it could be
or
many different
you know,
reasons.
credit,
Right, this
credit
is-
report comes up where an incorrect tax lien. We saw that once before. So I can imagine someone comes to you for a regular loan, some glitch happens. Suddenly, oops, they can't get the exact loan they want from you, but they still want the transaction of buying the house. So go ahead, you refer it to Mark. He gets the deal done, and then you now can work on that loan again, and eventually.
Yes. Now, Mark, when you say it's a bridge loan, is it tied to the house that they're buying, or it's tied to the house they currently
Well,
own?
there's a couple of ways that we can do it. Now, the one we were talking about the glitch, this is, you're pre-qualified, everything looks good, you enter into contract, your deposit goes non-refundable, and within that 2 or 3 week period where you're getting ready to close, something happens, or they pull a second report and find something, or your source of funding doesn't come through. That's a common situation that we fund. Another one is, and this is, we're working on a file right now where, because it's a tight market, the seller, or the borrower rather, doesn't want to sell the house they're living in now because they don't want to be stuck with having to rent because now they weren't able to buy the house they wanted, or it took them longer to find the house they wanted. So more and more people are taking advantage of another bridge loan product, which is you're living in your house presently, you're going to put it on the market, maybe it's on the market right now. You've identified a house you want to buy, get into contract, you need to close, and And we can make a loan up to 100% of the acquisition price by using the equity that you have also in your existing home. That way we can help you buy the house that you want and then put your existing home on the market after you bought the target property. And that's just a way to ensure that you're not going to be stuck selling your home and you can't find anything to buy.
All right, guys, we're going to cut to our third and final commercial break, and the theme is Elvis Presley's song "In the Ghetto." Oh, which, by the way, Mark, how do people get a hold of you?
Pacific Private Money, 415-883-2150 in the Bay Area, or go to our website, of course, pacificprivatemoney.com.
And audience, after we read the trivia question, when we come back, make sure you stay with us because Mark's going to show us how you can earn over 8% with your money very conservatively, which is very needed out there. Okay, last trivia question here. In which season of the year is most likely the setting for the song "In the Ghetto"? All right, 4 seasons of the year. Pick one. All right, the first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. In which season of the year is most likely the setting for the song "In the Ghetto"? Make sure to include your name, your email address. Speak slowly. Spell out your email 1 letter at a time. Don't touch that dial. The Best of Investing will be right back. Mark Hanf is going to teach us how to earn 8% or over 8% conservatively on our money.
On our moolah, our stash.
Are you seeing the interest rates for hard money stabilizing, or is there some?
They're still going lower. Oh my God, I'm losing deals to 8 and 2 quotes from other people. Yeah, these are guys that have are able to leverage with like a bank money or
So
something.
guys are going somewhere else to get 8%.
You can get 8% hard money now. This was I lost a nice bridge loan. I quoted him. I started out at 10 and 3. I got all the way down to 8.5 and 2. And when he came back at 8 and 2, I said, I'm done.
Yeah.
You know, I didn't see it in writing. He was just calling me up, going. I thought he was just jacking me around. I
And he
just
might be.
said, take it. Call me. You know, if it doesn't work out. But just know that if you leave me with 5 days, I may not be able to get you that pricing
It's the
anymore.
only thing you can do.
You know, I just
Wow, 8.2. Went in like 60% or more, probably.
it wasn't that big a
70%.
loan. It was only like 200,000. So you know, I'm not going to work for.
There's a lot of money out there for
Yeah.
200,000. If it's 800,000, he's not going to find it. But 75% LTV probably too.
Well, it was below 50% LTV. I mean, it was a really cherry,
wow.
easy, but it was 175. You know, and I just, you know, I didn't want to work for anything less than a $5,000 gross fee.
Yeah.
It just feels like chump
Well,
change.
especially if they keep going back and forth. Well, how about this? How about this? How about this?
Oh, that's how he started.
Yeah.
He had me negotiating against
Those
myself.
kind
all
of
the time.
clients are going to be difficult the whole way through.
Yeah.
Too.
And then you might not still get it because.
What's that $50 wire fee? I don't remember you just telling me about that one.
But that's okay because I get this other lender who is going to do it at the last minute. Oh, I got to figure out how much time we have left here.
How many minutes?
How many minutes?
In the grotto.
Short one. 7 minutes and
Really?
26 seconds.
It's been gabbing away. Look at that.
Yeah,
Quick.
that's
The grotto.
all right. Away we go. One more time, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt and Robert Jeff. When we cut to the third commercial break, we asked this last trivia question about the theme. The theme was Elvis Presley's song "In the Ghetto." In which season of the year is most likely the setting for the song?
I can't remember if the words were September morn or December morn, so I'll say winter.
Winter, that is correct.
I was going to guess autumn because you've been pronouncing the song ghetto.
Autumn.
No, because it's supposed to be snowy and wintry and cold.
It
And all
ought
that stuff.
to have been the winter.
Yeah, there you go. Okay, so Mark, we teased the audience ahead of time, saying that you're going to explain to us how we can get over 8% or 8.5%.
Well, our private primary investment product at Pacific Private Money is the Pacific Private Money Fund, which we launched in 2013 in response to growing demand for high yields by people with money to invest either from their savings or their IRA accounts. And so we launched the Pacific Private Money Fund with the goal being that we would use the fund invested capital to fund the best loans that we see at Pacific Private Money. And so last year we funded just a little over 50 million in total loans. That was about 150 plus individual loans, average loan size, between 250 and 300,000. So we see an awful lot of deal flow at Pacific Private Money, and some of that deal flow that comes in is short-term loans, and so the fund is actually designed to profit from those people who need money for a very short period of time, like the bridge loan we were just talking about, where some people need to close quickly, and then they're going to conventionally refi within 60 or 90 days. So the Pacific Private Money Fund, we put half of the origination points that we charge to the borrower go into the fund, and we do that because we use the fund to do primarily short-term loans. That way, the yield that the fund earns is increased by that 50% origination.
I don't know
So,
any
so in
other.
other words, if someone comes to you and wants to borrow money short-term, $100,000 or $400,000, not only do they have an interest rate of 8 or 9 or 10%, but there's a fee besides the closing cost of 2 or 3 points, which
Yes.
means of 1%.
2 to 3%.
So for every $100,000, they're paying a fee of $2 or $3 or
And he's sharing
$4,000,
that with the
which
fund,
in my
which is very rare. You don't find.
it's
unique. It's very unique. Very
So our
unique.
fund is paying about 8.5% right now yield to the shareholders, and we're doing that by offering very, very competitive priced loans as low as 8%, but usually closer to 9 or 10% plus between 2 and 3 points, and that money is earned by the fund for making those loans. And so the 8.5% we're paying out has been now for 3 consecutive quarters. We've got our 4th quarter coming up, and in fact, we just converted to monthly distributions to the fund to popular demand. So for people who are looking for monthly income, the fund is perfect because we're paying now out right around the 10th of the month. We're making a distribution.
Which is also rare. Usually funds pay quarterly.
Do they have the choice, or are you set up for automatic reinvestment?
Yes, we are. We're set up for automatic reinvestment, which is why it's perfect for IRA accounts as well. So, Edward, you mentioned it's conservative. And the reason we call it conservative is because we don't do high percentage financing. We don't even do the 80% financing, which is common in the conventional lending realm. Usually, we don't lend higher than 70% of the purchase price on a purchase money loan, or if it's a refi, we generally don't go higher than 70% of the appraisal. I say generally because sometimes there's certain purchase situations where somebody's getting an exceptionally good deal below market, and those still do exist. Some of my better investor and contractor clients sometimes are making some exceptionally good bargains, and we may bump that up slightly. But the weighted average loan to value in the portfolio right now of the Pacific Private Money Fund is just 64% loan to value, and so that's very conservative.
Well,
All
it's
based on-
actually less than that because what ends up happening is the people who are fixing and flipping are improving the property. So someone, let's say, purchases a property for, let's make the number simple, $1 million, and Mark, let's say, lent $640,000. That's 64%. But that $1 million, the borrower is now putting money into the property to make it worth, $1.5 million, and so now the LTV has dropped even more.
Yeah, and keep in mind, we're not lending on the future value. When we say a weighted average of 64%, or that we typically don't lend more than 70%, it's not 70% of what the borrower hopes the property will be worth. It's actually of the purchase price. We only work with borrowers who have their own capital. We don't do construction loans, and we generally don't do land loans and other of those esoteric type of development type things.
Which is the reason why the
Very
default rate
straightforward.
is very,
And
very, very low.
for investors, they should know that the appraised value is not something that the borrower comes in with. It's you get an appraisal.
We order our own appraisals, absolutely. So 8.5% you can earn on your savings or retirement accounts. For more information, give us a call at 415-883-2150 or go to our Mortgage Pool Fund website, which will give you a bunch of information about how the Mortgage Pool Fund works. That is at pacificmoneyfund.com.
Yeah.
pacificmoneyfund.com.
Now, if you're happy earning 0.00001% at the bank, then just keep your money there.
They don't have any fees.
Or if you think the
That's
stock
true.
market's going to go up another 25%, which very few people I know think it's going to do that. But if you're looking to diversify and boost the yield of your overall investment portfolio, you really ought to take a look at diversifying a portion of that savings into a mortgage pool fund.
And I have some of my IRA money with Mark through a custodian, IRA services in San Carlos, very reasonably priced. And I've been very happy. It's been exactly what Mark has said it's going to be. Okay, we're going to have our thoughts for the day here. This is from David Letterman. You've heard of him. North Korean leader Kim Jong won re-election with 100% of the vote. And they say when the absentee ballots are counted, the percentage could go even higher. And the national anthem of Greece has 158 verses. And by the way, no one in Greece has memorized all 158 verses. Can you imagine having 158 verses on your national anthem? Tune in next week to The Best of Investing. There's not going to be 158 verses with us. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
You're good, man.
We're